The deadline for tax returns is on January 31st. It's important to file yours early for various reasons. The one good thing about the tax return deadline is that it always remains the same, January 31st. This means that with a little bit of organization and the help of your accountant, you should be able to avoid facing penalties by maintaining easily accessible and up-to-date records of your income and expenses throughout the year. If your financial affairs changed this year, then putting them in order sooner rather than later will give you the space to think about any tax planning opportunities available to you. It also allows time for bank statements and any other financial documents you may need to file the return to be collated. Calculating your tax liabilities and filing your return now will allow you time to start budgeting and managing your cash flow, and to plan for paying any tax you may owe. Speeding through your tax return at the last minute increases the risk of mistakes being made, and HMRC has declared it will, and does issue fines for errors. And if you pay your tax bill late, HMRC will charge you interest and possibly even late payment penalties. The earlier you file your tax return, the sooner any refund you may be eligible for will be processed. That will mean any money owed to you by HMRC could be gathering a few months extra interest in your bank account. So why wait until January when refunds usually take longer to be issued, as this is HMRC's busiest time? If you delay filing your tax return, you risk missing the deadline and face being issued with an automatic £100 filing penalty, no matter how much tax you had outstanding. If your tax return becomes more than 3 months late, £10 daily penalties will start building up until they hit a £900 peak. Tax has become an ever-changing and increasingly complex field, and unless you have expert knowledge, you may be left bewildered and miss out on all the reliefs you are eligible for. So why wait? Call us today on 020-3301-5868 or visit